Hello, elemental market traders, and welcome to this lesson or this video where I'm gonna show you literally how you can benefit from the markets. This is the bridge between retail traders and institutional traders. Institutional traders always make money, retail traders always lose money. If you look at the stats, about 70 to 90% of the retail traders lose money. And it's literally as that. Within 90 days of 90 trades, 90% of retail traders lose their capital and they refund their accounts up to 10 times within a time frame of a year. So knowing that, what I want to explain to you in this video is a simple trading plan, keeping it simple, and just looking for one thing, one pair. So you have to master one pair, one strategy, and one risk reward ratio. Now, with the trading plan, we want to dive we want to dive straight in towards it. So you want to master one pair. You find yourself one pair and you go and back test it. You go and look at something that you can find as an edge. You should first have to study the markets. Once you understand the markets in an institutional manner, you'll always be ahead of the game. So one way that I've taught most of the mentees in the Warzone group is to look at high low points. So you box out a specific region, and out of that box region, you go and study what is happening with price at that time or even before that. So let me just quickly show you an example. So so you're looking at that last bearish movement before price turn around and impulse into the upside. And you look at something that you can utilize in the zone, not a candlestick pattern. Candlestick patterns are for retail traders, and that's why they lose. That's just a tip for you. And also, we're not looking for trend lines. Trend lines only works in certain market conditions. In other market conditions, it will literally lose you a lot of money. So this is basically what I would advise you to do is go and look at all of these high low points in terms of an up market, in terms of like a bullish market, and lower highs in terms of bearish market. And with those, you would find something that will make it worth your while taking a trade. And you would find something that works out to you. Most of you are most probably also used to a Fibonacci. You can utilize a Fibonacci. We don't use Fibonacci's only because that is not an institutional way of looking at the chart. But this should help you to start formulating a certain strategy. And you only want to master one strategy. If you are the master of too many strategies, you're always going to lose because you're always going to look for too much in the markets and you're not going to know what to do anymore. So with that being said, basically, I'm just mapping out everything that's happening here. So we know, and I'm going to give you something simple to work on. We know whenever there's an impulse, there's retracement. And on the retracement gives you the best possibility to buy. We buy low, we sell high. So we buy low and we take out our positions on the high. So with this happening on the low time frame, you can also expect this, where market goes into one direction and breaks up. So let me just quickly show you. So this would be a low low. This would be a lower high. Let's just do that. And then we have a lower low. And then market breaks into the upside and then comes back, tests somewhat of a supportive level or just whatever it is that you're looking for. If you want to learn a bit more, go into the mentorship. But this is something that you can utilize. Looking for some type of pattern or whatever. We don't utilize patterns because it only works out in some markets. But this is one thing that you can utilize to make a decision in terms of trading. Now, if I'm looking at this scenario right here, let me just copy one more or two more boxes, then you're going to find yourself taking the right trades. Don't know what I did there, probably cut it. Yes, there we go. Okay, so if we're looking at this scenario, it looks similar to this scenario, yeah. And once you master this one strategy, you can literally get out of it a very good pip count. I think there's almost 200 pips from, 300 pips from the ones that I showed in the mentorship. I think we took profit earlier. So here's a lower low, lower high, lower low, high high. We broke structure here, so we can label that right there a break of structure. So we label that as a break of structure. And you want to see once price retraces into this box and it's starting to break, what happens? And this is literally just studying. Once you've done your study work, you can formulate a system. Now, this is what we're doing, we're studying it. So I'm going to go into this region and I'm going to go to the lowest time frame, 5-minute time frame. And you can see what's happening here is prices again, you're waiting for structure to break. So there's a high point, a lower high point, lower high point, lower high, lower high, lower high, lower high, equal, lower high, lower high, lower high, and then you have the high high. Now, same thing that happened here is we had this break into the upside. Now, if you don't have your ratios right, so you don't know what you're looking for. Now, once it breaks up, anything or anytime price comes back into this region, yeah, you can enter trade. And even with proper risk management and proper lot management, you'll always be ahead of the game. So let's say your stops are just below this box, knowing that price is breaking out. So you have a 15 pip stop loss, and you're looking at a minimum of 1-to-5 ratio, which means if you have a 1-to-5 ratio and you lose about 70% of your trades, you'd still be ahead. I'll give you an indication quickly now. So let's say out of 10 trades, let me see if I can get the calculator in. So out of 10 trades, and you're trading on a 0.1 dot, just as $1,000 account, so 0.1. That means every pip is equivalent to $1. So $1 times by, let's say you have a 15 pip stop loss, and you're targeting 75 pips. So if you times that by 15, then basically you get to 50. So let's say you lose 70% of your trades. So it's 15 times by 7 gives you 105. Okay, and you only win 3 trades. So it's 3, so 75 times by 1, times by 3, you have 225. So minus the 105, you're still up 120 pips. That's to give you, if you're trading on a 1-to-5 ratio, and you literally have only a 30% win rate, and I think most of you would fall in the bracket between 30, 40, 50, maybe 60, if you're really good, 7%. And this would literally eradicate most of your problems. So the same thing happening on the next one. So we're looking at this whole box here, and we're doing the same thing. Once we break structure, we can look for trades to enter. And then again, once that break happens, that's where you want to try to enter. So price moves down. So we have again a high point, a lower high point, a lower high, not as clean, lower high, and then we have the new high. So knowing that we broke structure here about, and again, it's not the cleanest setup, but then you want to go and enter on this region here. You want to enter on this whole liquidity region. This is something you can utilize within your trading. This is literally a plan that I'm formulating now with you that you can utilize on your own trading, going with that same risk reward ratio. So I'm just going to copy this one over, and then taking that 15 pip stop loss, knowing it's just below the current box. You are safe to say when price goes back down and makes a double bottom, or however you view the market, or goes and tests that same structure level, that's support, you're still in a good trade. So with that, let's see both of these trades played out perfectly. And this is how you'd start formulating that plan. So we now have one master, or one pair that we master. We have one strategy. So let's say this is called the breakout strategy. And this is the one that you want to actually work with. And that means from the high time frame to the low time frame, as prices retracing, and it's retracing, that's where you're going to start looking for your setup, and then you're going to have to be active at the market. Obviously, depending on what type of trader you are, you'll always find a different way of trading. If you're a swing trader, you'll find a different way. If you're a day trader, you'll find a different way. If you're a scalp trader, you also find a different way. I can show you everything that we've just done now is possible and plausible on any time frame. I can go into 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily, weekly, and you'll find a common denominator for you to find an edge of the markets. Now, this is the pattern that you're looking for, and then you buy again into this box. However, if price even goes back into the downside, that's fine. Your stop loss should help you, even if it just touches again. If it breaks just above it and it goes back into the box, that's fine. You're in a good trade. You're just looking to get that entry. This is literally how you'd formulate a plan. The reason why you follow a plan is because that makes you disciplined. that makes you consistent. If you follow this plan, you're a consistent trader. If you follow the plan literally to the T and you have your risk reward ratio, as we said, 1 to 5, 1 to 5, 1 to 5, you will be ahead of literally 90% of any of the retail traders outside that is losing every single day. And if they don't lose every day, they lose at least 90% of their capital within 90 days with 90 trades. So our rule is no setup, no trade. We want to master only one pair. If you don't master that one pair, sorry, but then you're gonna lose it. You're gonna lose that account over and over. Risk management. So if you're trading, let's say, of a $100 account, you risk 1%. 1% risk. And these are easy rules to follow for you to take a trade. Now, as I said at the start, you have to study the markets. Once you understand the markets, you create a system that has an edge over the markets, and this is what we did now. If you don't understand it, go back. I'll also break down another way of trading that can help you to swing. Let's remove. I actually want to keep the example, so I want to keep both of them on. I'm going to give you a swing trade scenario that you can also utilize, something free for you to go off and decide how you want to trade the markets. Okay, so this is something that can always and will always help you. So you study the markets, and once you have an advantage over the markets, you can actually take the best type of trades. Because then you build a system that works for you, and then it becomes self-mastery. You have to master yourself over your system, because your system has an edge over the market. If you don't master yourself, the market's going to master you, and everything is going to go to destruction. So let's say, what you want to look at what you want to look for when you look at the markets is areas where price has completely dropped hard. Now, what I mean by this is this region here. Look at this. Price is consolidating through this whole region here. And I can go for the top side of the wick, all the way to that bottom side of the wick. So that top side, that bottom side, and I use a breakout box, so it's transparent. You can see price is consolidating. Price is not doing anything. And it just pushes up and it drops completely. Now, this whole area right here would be an area of interest, exactly where the box broke out to that higher side. But this is too much of a range for you to consider an area of interest. So you would take literally only the wick regions. Only the wick region, saying, okay, this is a resistance. Now, if I zoom out, you're going to find yourself finding also somewhat of a support resistance region as this whole zone. So scrolling out to my left side, what's happening there? Nothing really. But just continuing with it, probably on the weekly time frame, you're going to start seeing something significant, something that literally repeats itself over and over and over and over. Now, moving all the way through. Look at that. This is where a previous drop happened. And even before that, that's where a previous drop also happened. There was multiple ones. Here's a multiple drop, 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 drop. From these points, price is actually reacting. There's a massive impulse, massive drop again. And we're at that region again. So that gives us a significant area of interest for us to actually take a trade. So if you're looking at a swing trade as a possibility, then you're on a 4 hour, 1 hour. Once price comes into this region, you actually want to take action. You want to look at the same pattern like this, but then just inverse. You want to look at price pushing to area breaking in that box. That's where you want to start selling it. So price comes into this region. Let's utilize our tools. And this is something that I teach in the mentorship. So the tools is the high, low, high, low, high, low, and then all of a sudden low, low. Now, boxing out this whole region here, this is your area of interest. This is where you actually want to sell it from. Now, this is a high risk trade. Why? Because your pip counts. If you enter at the bottom side of the box, what does that mean? Nothing. It means you're holding a 24 pip stop loss. That's not good enough for me. I don't know about you, but this is something that would not work for me. Now, 30-minute time frame is what you want to combine. Once price comes into your zone, you want to follow it. Now, here we have an earlier break. So this is the previous structure that you could have gone into, and look how it goes. Price breaks through it, creates a new low point. Now, this is what we're looking for. We're looking for price to drive up and then break down and then sell from the zone. Now we can have a reduced stop loss because we are entering on a better point. So taking it, break and retest would be basically how I would view this. So you have a break and retest, and knowing that price can go back into this box, you can still go for your 15 pip stop loss. That's okay, that's fine. That shouldn't harm you. But now you can go for that 1-to-5 ratio. So let's go 3, or you can even go for 1-to-3 ratio. So having that 15 pip stop loss and then go for 45 pip run, that's the easy way of going about it. Or you can hold it out for your 1-to-5. Let's go 1-to-5, there we go, and let it play out. You can see price came back into this region once more, came back into that box, retested the box. That's what happens. Trading does that. The market isn't fluent all of the time, but once you reach take profit, you have one win. If you take a loss, it's fine. It's part of your stats. This is a simple, easy trading plan for you to follow. I've even give you 2 strategies that you can utilize, and these strategies should work for you if you really are a disciplined and consistent trader. If you're not going to be disciplined, if you're not going to be consistent, but then your results are not going to stay stable. If you're trading a different strategy every day, every week, every month, expect your results to be the same. Influctual, up and downs, losses, wins. And that's where most of the retail traders sit. So get your game straight, focus on a trading plan. You can even take out partials at a 1-to-3 ratio. I would recommend a 1-to-2, take out partials at 1-to-3, and in 1-to-5, take out your full profit. Master one play, one strategy. Here we have a break of structure, breakout. Let's say breakout retest, breakout retest, breakout retest, BORT. And even if you want to go label it, post it onto your socials, whatever, breakouts, RT, make it look neat, make it look like you know what you're doing, because this is the most important key is if you don't understand what you are doing, then you're just following the rest of the trend. If I'm utilizing a Fibonacci here, let me quickly see if I can bring that out. Choose a trending Fib. Okay, so if I'm using a Fibonacci here, I'm just following what most of the retail traders would do. Most of the retail traders use a Fibonacci. Now, here's the question. Do I enter on the 50? Because I can even add the 50. Do I enter on the 61? Do I enter on the 78? I don't know. That is not the best answer for you to trade with. You need to know what you're doing. You need to know what's your strategy. Now, this strategy was easy. We found out where price broke from, and that's liquidity. That's literally sell liquidity. I can even do it just the way we do it in mentorship. This is not mentorship trades. We have a very specific region, which would be this region, and then even organizing it a little bit better. Your entry would be refined all the way through to there, and then taking it to the 5-minute time frame. Let me quickly see. So I can just give you a little bit of a taste of what's happening in the mentorship. This whole region here would be your area of interest, and then you enter there with about a 10 pip stop loss. So if we have a 1-to-5 ratio, this one probably already played out, very close towards it. The 1-to-3 already played out, so 1-to-3.5. There we go. That one played out very perfectly. And you can see it's the best possible entries you can get. This again is certain things that you need to consider. Well, the one thing you need to do first of all is go study the markets. If you don't understand the market, sorry, but then your system is going to be full of flaws, going to have a lot of problems, and you're never going to get ahead. And that's what we want for you to have in the markets, is to actually have a consistent edge, something that can work out. Have a 1-to-5 ratio, see how that works and wonders for you. As I've shown you, you can have a 30% win rate, still be ahead of the game. If you don't have that win rate of 30% and you have a win rate of 50%, well done. You can even work yourself up better. So keep your trading plan simple. You have to have rules. If there's no setup, there's no trade. Master the one. Don't master too many. If you have 10 pairs on your what's on your watch list, you're gonna have problems because you're gonna try to master too much. If you have more than one strategy, you're also gonna have problems. You're gonna try to master too much. Hopefully this was helpful, and hope this adds value to your trading, to be honest.